Well, good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Thursday, the 3rd of July, 2025, and we're about 6:40 p.m. Central Time. Now, remember, you have abbreviated trading sessions. It is the 4th of July. Many of the markets will close before noon tomorrow Central Time. You're open tonight in the metal markets, and you can see they're basically stable. They're not moving one way or the other. Stock market doing pretty much the same thing. As we look elsewhere to see what is really going on, Bitcoin down a little bit right here. Grains are closed basically. You're going to get a lot of the other markets closed. You're still trading in the bonds and notes. So the financials are what's basically open. There's no major economic data. You know, today we saw that the President Trump's spending tax bill, I wish they can give it a name we can all figure out, but his spending tax bill finally passed, and surprisingly, only 2 Republicans held out. And of course, they'll be on the president's hit list, whether he says yes or no. You know how that's going to work. But it's what we were talking about here. Number one, Congress wants to go home for the holiday. Number 2, once the Senate did their bill, the question was it really worth fighting back and forth over indefinitely? And there were cave-ins, and how this all gets done is it's in the back room. And the president and Speaker Johnson will talk to them. They'll make assurances. They'll say, hey, we don't have to do this. With the presidential order, I can do this for you, so on. It's called horse trading. And that's what went on. Then we saw the filibuster type speech. You know, that's all I can call it. Hakeem Jeffries was, you could see, he was set to break a record. So he went after McCarthy's record. I think McCarthy was 8 hours, 32 minutes. And I think Jeffries was 8 hours, 37 minutes. Where they give what's called, the minority party can give, and especially at the head of the minority and so on, they can give typically a 1-minute speech. Well, yeah, it can go any length of time they decide. So that's what you saw. But at the end of the day, you've got a bill. It is inflationary. I'm going to talk a little bit about why in my financial update. That's what I'll lead off with and talk about my view on why I don't buy what these politicians say, that it's a one-time bump. And I'll explain it in what I think is parlance that we can all understand. All right, so let's take a look at what we've got. But maybe before we do that, you remember, this is my 4th of July sale. Take advantage of it. All you need to do is go to our website, iraepstein.com. It's 40% off of any of my 1-year subscriptions to my research. All I need is one good idea. You think that can't cover, if I can do that, $94 for a year or $172? I mean, that's basically what it's about. And if you're a chart technician, you know I'm going to cover the charts in details. I'm going to talk patterns. I'm going to talk moving averages, slow stochastics, my development of the swing line, golden crosses, death crosses. You'll get it all there. And price counts, it'll be all through that. And remember, I am really contemplating coming back and doing webinars. I don't know when I'll start them again. I just don't have the time yet. But when I do, I may make them only for the members. You know, I watch what the CNBC Club is doing. Why do I give it out to everybody? So that might be something that we do. Charting courses, 40% off. Now, if you really want a course to get the basics out of, how do you work with moving averages? What are they? Why do you use them? All those type of things, slow stochastics, I can go on and on, window envelopes. It's here in detail. Then, to carry you for your next degree in it, Bollinger Band course, enhanced Bollinger Bands, or the outside day. And you see these all the time. Again, they're 40% off. And you only start these when you're ready. When you sign up for the research, I put you right on it. So that's how those go. You'll see an icon up here. Take advantage. So when we look at the gold market, you're still staying over the 18-week moving average of closes. That's bullish. When you look at the gold, you came down, and as I said to you the other day, you broke the downtrend. That doesn't mean you're instantly into an uptrend. You had today an outside day to the downside. Today's high is what's important. unless that's taken out by, let's call it Tuesday, because you got a half session tomorrow, then I'll be looking at it. Take that out, and I think you got some move to the upside. You can see how the swing line's there. How the swing line is made at the peak of the market is what I should say. You've got a higher high, but a lower and low pattern. If you were in a downtrend, you'd have lower highs, lower lows. In an uptrend, higher highs, higher lows. So we'll see what this market can do. Where's the battleground? You will hear me, if you're watching these videos, consistently say that moving averages are so useful because they give you reference points on a chart. They're not forward-looking. They're backward-looking. They're made up of old data. They're not telling you that that number's going to be hit. But you can read a lot from that. Markets like to go back to what I call a pivot. And in that pivot, I use the 18-day average because it's from there that the market decides should it have bullish bias or bearish. When the market's over this number, I have bullish bias. So when it falls to it, I'm looking for support. When it's under it, it has bearish bias. When it rallies back up to it, I'm looking for resistance. Got it? And it's back and forth like that. When I look at what the market's doing in terms of the slow stochastics right here, well, to me, what's ultra clear is you have a broad sideways range caught at the 18-day average, and they're trying to narrow these bands in a little bit. What else in momentum? You were oversold. You're not that way anymore. So at this point, I see the bias down. I don't see a trend in the market, and momentum's no longer oversold. When I look at the gold-silver ratio, as long as you stay under it, silver, in theory, is stronger than gold. Why? When you're under it and the number's falling, if you think of it this way, you take silver, and how many ounces do you need to get 1 ounce of gold? Forget commissions and all that from your friendly jeweler that's going to do you a big favor. You understand what I'm getting at. It's just a pure price. And the lower it goes, silver's in theory stronger. When it goes up to these numbers, silver's weaker because you need more ounces to buy an ounce of gold. Well, in the silver market, the trend is up. Higher lows, higher highs, momentum's up. I went online to you the other day and I said, I'm not thinking this pattern's ready to break out. I think it's caught between right through here, the upper and lower band, but I don't think it's going down. I think the market's making a story to go higher. If you recall, when I did my special report in silver, and a lot of my traders were able to catch that move, we were talking about it, and then the market peaked out, it's come back. I happen to think silver's going substantially higher, not slightly, substantially higher over time. When we look at copper, it's been a big run to the market. You don't have an embedded reading. You're overbought. It's not the prettiest of charts that you've got. You've had a lot of outside days that have been violated. That's very rare. But there's a lot going on in copper. Another time, I'll devote more time to that for you. In the platinum, I was looking for a retracement. Now, what the market did is you lost the bullish embedded reading. You came up. You made a run for these highs and you went absolutely nowhere. Remember, even if you take them out, there's no Bollinger Band or moving average above the market. It's just a resistance point now. And I think the market's sitting tight, saying, maybe you play me off the weekly chart, not the daily chart at this point. And we'll talk about that on the weekend. In the dollar index, the market's been coming down. It refuses to embed. And to me, that's a sign that you might have to get more short covering. Will we see when the markets reopen in the dollar and everything next week with full trading that the market says, you know something, the Fed's going to eventually have to hold rates because of the jobs report. I'll cover that and what we've got right here. But that's what I think did it for this market. As much as we were talking, this market's going to come down because interest rates are going to be cut. That's not supportive to the dollar. The fact that they stayed up a little and the jobs report was so good, you gave a bid back into the market. Now, what should, if the president's right, work is do what? His plan should make the economy grow. If not, that's his fault. All right, so everything's on him, but he's a one-term president now. He's already served one of his terms. This is it for him. The other thing I told you, and I don't want you to forget it, in January, I told you this man was going to hit his office running. He took office, January 20th. Look at all that has taken place. And the reason, he's no youngster. He's running to do it. He's done it before. Time is his enemy because by the time we get towards midterms, he may not have control of Congress the way that he does right now. He may lose a lot of that. So his legacy is what he's doing right now. And don't you forget that. And don't you forget what I'm telling you here. Take advantage, 4th of July sale. I'll catch up with you all over the weekend. Have a great 4th of July.